Good morning everybody, welcome to this SmartCharts European session. I hope you're all well. Alright, so we have the US inflation report today and the Bank of Canada interest rate statement. Two very big news announcements. First of all, inflation measures the change in price of goods and services in the economy, and it's very important because it's used by central banks to determine interest rate policy. So we know several years ago inflation was rising, and this is what caused many central banks around the world to increase interest rates to get people to spend less in the economy and just bring prices down overall. But now inflation has been falling, so central banks have been cutting interest rates to get people to actually start spending a bit more in the economy. So it's a bit of a balancing act, okay? And recently what has happened is that now we have inflation getting towards central bank targets of around 2%. Most central banks have a target around 2% for inflation. And so we have some central banks just keeping interest rates on hold. Some are still cutting, some are still rising. So we've had some really big trends to the upside and to the downside, and now we're languishing a little bit on the dollar pairs, where we have a bit more of a range-based situation developing. So this announcement will be very interesting to see if we can get more of a directional bias on the US dollar, because it's a bit mixed right now. Okay, I mean, the US dollar has been really strong and against the Aussie, against the Kiwi, against the Canadian dollar, against the commodity currencies, some really good trends there. Okay, but it's been pretty weak against the euro and the pound, so it's a bit of a mixed bag there. So let's see if today's news announcement is going to change that. The market isn't expecting actually any changes from its prior month's inflation of 0.3% on the month-on-month reports, so it could be a non-event. But remember, when the market gets surprised, okay, this is where we can get some really big moves, and sometimes they're a bit too wild that we can't trade them, but then sometimes we can trade them and there are some good clues, and of course we want to keep an eye on that as directional traders. Okay, the key then is just to make sure you don't have too many US dollar trades in the run up to that news announcement at 1:30 p.m. and just be mindful of risk management, always protecting the account first and foremost. We then have the Bank of Canada interest rate statement and press conference, and it's widely expected the central bank will cut interest rates from 3.75% to 3.25%. So that's already expected. Of course, if the Bank of Canada do anything different, then this can cause some wild movements in the market, okay? Because the Canadian dollar has been pretty weak, hasn't it? We've had dollar CAD pushing up, euro CAD, pound CAD, so the Canadian has been quite weak against those currencies because of the potential interest rate cut. All right, so again, let's see if there's any difference, and then if there's like a big readjustment of positions, which can lead to some potential trading opportunities. But the key is that we don't want to be too overexposed to Canadian dollar in the run up to that news announcement in the afternoon at 3 p.m. So I would say be a bit careful about US dollar against the Canadian today around the US session. It could become quite volatile. But let's see how the dust settles and if there's any potential trading opportunities around them. I mean, if you are a trend trader, you have already been trading these market expectations anyway, because you've already been trading probably Canadian dollar on Euro CAD, Pound CAD, and dollar CAD all going up, okay, on the lower time frames. We've had some good trend trades there intraday. So in a way, many of you, just by following the technical picture, are already trading these different fundamental narratives in play. You just may not know what the fundamental narrative is. But we need to know about when news announcements are released, just to manage the portfolio properly, make sure you're not too heavily overexposed in the run up to a high impact news announcement, and just, you know, really protecting the account and thinking as a risk manager. Okay, let's get an update then inside of SmartCharts and see what's happening on the technical analysis side. Okay, so if we look at the tools tab here, so again we can see the common theme that has developed this week, weakness in the commodity currency. So like New Zealand dollar, Aussie dollar, Canadian dollar has just been weak all throughout this week, and even last week as well. Really, they took a hit last week when the Australian GDP report was a massive miss. Okay, it came in much lower than expected, and that hit all the commodity currencies really, and so that's been a good theme. and there's been some good intraday trading opportunities. And because it was fundamentally there was a surprise, there wasn't really any moves on the daily chart because the news announcement came out and then boom, the market just went. So this is where you have to go to the intraday charts and lower time frames and then capitalize on those price cycles on the way down across all your different trend strategies. So we can also see, a bit of strength there in the British pound, which we have been highlighting as well. When it comes to the currency strength index, or indicator, if you're like an intraday trader, you want to be pairing up strong and weak currencies because you're trading an exchange rate that are paired. So when an exchange rate is rising, the base currency is strengthening, terms currency is weakening. So you're going to get the best trends when you're buying the strongest currencies and selling the weakest currencies. All right. So if you're like a intraday, fast time frame, short-term trader, you want to be using this to your advantage. If you're like a medium to high time frame trader, then you may be using this to keep an eye out on potential trend reversal opportunities, because if something's really strong, something's really weak, and it's been going on for a while, at some point it will rebalance and will actually reverse, and you might see a round of profit taken. And actually this is why the New Zealand US dollar exchange rate is actually quite interesting on the volatility reversal. So we've had a lot of trends trade this week, which has done quite well with the pound US dollar on the 1 hour chart, on the market breakout strategy, the Canadian Swiss on the 4 hour chart, on the phase changer strategy. But we also have New Zealand against the US dollar on the vol reversal. Now your vol reversal is your range and trend reversal strategy, and utilizes fractals and to help identify swing highs and swing lows, and to help identify where those double top, double bottom patterns are. So like here you have this double bottom pattern here with this up arrow, you have this double top pattern here with this down arrow, and we have this double bottom pattern here with this up arrow. So while SmartCharts will find the exhaustion patterns, we also want to make sure these are at major levels of support and resistance, and they're not exhausting at just some random old place. So what you can see where we are right now, we're in a big zone where historically, look, price has been turning here in the past, right? So we've got a very, very big zone here, and so we've come into the bottom area of this zone. You can see that the market turned here, right, and then it turned around here, and then here, and then here, and then here, and look, we've been trying to turn in this area as well. And you can see that whilst we are at a potential end of this downtrend that has developed, you can also see we are in a very long-term trading range, aren't we? Because you can see that price has been turning at these price levels at the top, so a very long-term trading range. But look, we like the fact that we're in this zone. We haven't done anything actually for Kiwi US because the zone is quite large. Look, it's been turning here, but it's also been turning here. So when the zone is this large, we tend to wait for the market to get right down to the bottom of the zone, and then look for the turn. Unless, like here, you had a really nice bounce here, really nice bounce here, really nice bounce here, and then you've got the double bottom here. So that's okay because these last two touches are quite clean on the top of the trading range. But you can see here, all right, this broke through that top part, it broke through the middle line, so then we were just waiting for the market to get to the bottom here, which it has now finally done so. So let's see if buyers do decide to turn up here again, as they've been turning up here before in the past. And we know this has been in a strong trend where we might start to see some profit taken, and who knows, maybe the US dollar news announcement will be the impetus to that today. We don't know, of course, but it's a potential trigger, it's a potential clue, isn't it? And that's what we try to do, stack the clues in our favor. So on top of helping to identify potential trading opportunities, SmartCharts will also help the risk management side as well. Click the up arrow, SmartCharts will populate an entry price at the blue dot, stop loss at the red dot, target the green dot, and do all your percentage risk, reward to risk, currency conversion calculations for you, which can all be adjusted according to your own user preferences. But it's just really important to keep the risk low and make sure you're able to deal with the random distributions of wins and losses that develop throughout the day, throughout the week, throughout the month. And if you're not familiar with how SmartCharts is helping you, then make sure you're reviewing all your e-learning materials in the Learn tab. You're attending all your online classes, workshop, boot camps and events in the Live Events tab, and of course all your coaching sessions as well. Make sure you're educating yourself in trading the financial markets and dealing with the risks involved in trading the financial markets as well. I like to set an expiry of a current bar close, and then we can decline or accept the trade here at the bottom. And basically what that means is if buyers don't turn up here and go to the entry level by the time this current daily bar closes at 10 p.m. tonight, then this pending trade will expire, didn't win, didn't lose, didn't cost anything. But if they do decide to turn up, this will trigger into a live open trade. Then either it goes to the target level or the stop loss level. So either it's a winning trade or a losing trade, okay? All right, that's it from me. I'm going to wish you all the best for your trading. Bye for now.